All right, so today we're going to look at the financials for Prestige Worldwide LLC. And this is an event company that's owned by just one person, so it's a single member LLC. And it's not taxed as an S corporation, so you won't see any payroll to the owner. Basically, all the net income is essentially the owner's to either pay down debt or to keep. The one thing that's different about this taxpayer is that they report their books and pay taxes on an accrual basis. So they pay tax when they invoice a client, not necessarily when they receive the payment. So keep that in mind as we go through. All the financials are run as of August 31st, 2021. So that's the date that we'll be using as the period end date. So let's take a look at the balance sheet. Best place to start. So if we zoom in here, you'll see that there's 2 checking accounts. In total, there's $508,000 in the checking account. It's a very profitable business for sure. And heading down our assets, the only other asset that they have, since they're just an event company, there's not any huge machinery or anything they have to purchase, is accounts receivable. So again, this is $36,000 worth of payments that have been invoiced, and those amounts are sitting in the profit and loss, but they have not yet been paid. So customers owe this company, Prestige Worldwide, $36,581. And that's as of 8/31. So as of 9/1, that amount probably increased when more invoices went out. But as of this period in time, $36,581 is owed. So we should be expecting that to come into the bank soon. So that gives us total assets of $544,000. If we scroll down, we see that our liabilities start with our Amex credit card. And this is a payment that we still have to make because we're holding a balance of $17,000. And then the only other liability that the company has is something called unearned revenue. So let's talk about what this is. This unearned revenue account means that they've received money in 2021, but have not yet done the work. So in theory, they've been prepaid and they might owe that payment back to the clients. So in this case, the amounts are sitting as unearned revenue on their balance sheet because they might owe it back to someone else, right? Liabilities are amounts that we owe somebody else, and we might owe that money back to that client. So it's staying on the balance sheet until the event happens, and then we can actually recognize that revenue as income. So we'll basically lower the unearned revenue account and increase our sales account. And that's something important to keep track of if you're an accrual basis taxpayer, that just because you receive money early doesn't mean that you actually need to pay tax on that. Because you should be paying tax on income when the work is performed, not just when it was prepaid. So scrolling down, the only other section is retained earnings. And you can see that at the start of the year, $104,000 was in retained earnings left in the business. The owner took a draw of about $16,000 to pay their personal income taxes. And then net income for the year is almost $200,000. So total, we have liabilities and equity of $544, which matches our assets. So now we can head over to the profit and loss and make sure that this net income is actually what we see on our P&L. Head over there, scroll up. This is a little bit longer, but you can see that, in fact, this is the net income number. I'll scroll up and let's talk about this. So we're recognizing income of $403,000. However, not so great on the margin because now we have to pay all the other vendors. So let's see, for every dollar that we bring in, simple formula, costs us about 41 cents in direct costs to perform that work. And usually that just means that a company will pay us to manage an event, and then we're in charge of taking that money, but also paying all the other vendors to work that event for us. So the owner has to factor in that for every dollar of sales that they bring in, they only get to keep 59% of that sale themselves, and for paying operating expenses, their own taxes, and paying down credit card debt. So it's important to know what your gross profit is on the amount of income that you're earning. So if we scroll down here, we have some auto expenses, some bank charges, dues and subscriptions, you can see that the accounts are pretty regular for most businesses. We have some gifts, some insurance, meals and entertainment. Now, obviously, these are much higher because of the clientele that this company is dealing with. So they're wining and dining people who are spending money with them. Same thing with vendors and all those other relationships that are so important. Some miscellaneous supplies. Maybe some of this should be included as cost of goods sold. We have some payroll processing for employee that's on payroll. And then we have some QuickBooks payment fees, some taxes that are local taxes that the business owes, travel, and then utilities. And that gets us down to almost $200,000 of net income in the first 8 months of 2021. So if we take a look at the total expenses divided by 8, we're running at about just under $5,000 of monthly overhead expenses for amounts due, regardless of whether or not we make a sale. That's really important to know. Keep an eye on and make sure that in the next 2 months, that number doesn't jump up to 6,000 or 7,000. And if it does, why is that happening? So this is a very healthy company. And then lastly, let's see where that $199,000 went. When we start with that $199,000, we have some adjustments for other items provided by operating activities. So our net cash provided by our operations is $198,000. And then we have some distributions for some taxes, some other owners' equity and retained earnings items that are in financing activities. And basically, our cash for the beginning of the year was $326,000, and we were able to increase that $326,000 by $181,000 to get us to $508,000 in total cash at the end of the year. And that's exactly what's on our balance sheet. This is a really good representation of a very strong company. And even though 500 out of the 508,000 that they received, technically 240,000 is still owed to clients or work still needs to be performed, it's still a really healthy bank balance, a healthy company, and for a single member LLC, much stronger than most of the businesses that we see these days.